Hey everybody, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with the Swing Trade watch list build we're going to do for tomorrow, Tuesday, June 7th. If you guys have any questions as I go through this, you can go ahead and put them in the box over there. I can see them, and I'll get to them when I can. And if you have any questions and you're watching this on a recording, feel free to email me at any time, jeff@warriortrading.com. It's been a while since I've done one of these. Have been super busy. House is being remodeled. Been in and out of temporary offices. Dealing with incredibly warm summer start to the summer here. So it's been pretty miserable. AC hasn't been running, and have not been happy. So anyways, back on here, the AC is running tonight and everything is good to go. Let's see, we are currently at warriortrading.com running a 7-day for $7 trial of our services, complete open access. We ran one of these back in December for Black Friday, I think it was. And we had a few hundred people stop by and check us out for that, and we added some great new members during that drive. And so we're doing it again. We've had a lot of people asking for trials lately. We don't do free trials because those are a pain in the butt to deal with and manage, but we are doing a $7 for 7-day trial. And something you've been on the fence about or something you're interested, especially as it pertains to learning how to trade, whether you're a day trader or swing trader, we urge you to check it out, warriortrading.com. And now, let's see, let's get into the watch list for tomorrow. So part of my process as a swing trader, I'm also a day trader, trade for a living, so I have to have many different tools in the toolbox. Just like a good carpenter, he has more than just a hammer, right? He's going to have other tools for different types of jobs and situations. Trading is no different. I have many different tools, among them, for swing trading purposes, which is ideal for part-time traders or people who can't be around to actively manage positions. I like to run my scans after hours once the market is settled down. It's closed for the day, and we get a good historical look at the day's price action. And I run some scans, proprietary scans that I have, that give us an indication as to what we can possibly expect tomorrow. And so I run through the scans, I filter them to see just the best of the best setups, and then I manually evaluate the results that populate off my scanner, and I build my watch list for the next day. Now, if I look at the SPY here, chart of the SPY, you can see that we're trading here just under the all-time highs, right? All-time highs here at 213.34. Today we hit an intraday high right around 211.77. So you can see after this little pullback correction we had in the beginning of 2016 that we've now moved up off this double bottom or triple bottom, and we're now testing this 213. We're going to test this 213 support resistance area, and potentially break out to new highs, or we'll sell off and we'll see another pullback. So what happened was we have this big move up in 2014 through 2015. We're in this very bullish trend. There's a lot of government influence in our economy, and everything's very bullish for the last few years. We start tapping this area here, getting some exhaustion. We make new highs, but then we sell off quickly, and we pull back. We make new highs, and we sell off quickly and pull back. And then we have these little corrections, about 5% pull back from the highs, and we can see that we rally up here and we test it again, only to fail again as the market starts getting its bearings, and the Fed starts pulling itself out of the economy very slowly. We get another test here, and this is where we're at in the last few weeks, the last couple months since April. We've been kind of testing this 210 area. You can see we finally broke above it here, and we're holding for now. So we really have two choices, or two options. The next step is going to be to test this 213.34 area, the all-time highs, and break out, or it's going to be get somewhere close in between here and fail, because there's just not enough buyers, not enough confidence in the bulls to take the market higher, and it'll sell off, and we'll see a pullback maybe to the 210 level, maybe down to the 208 level, and then certainly there's always support around the 205 area. You know, so these are pretty obvious areas in the chart that the SPY tends to respect as technically important areas. And so we'll either break out or we won't, and we'll come down. I don't know what's going to happen tomorrow. I'm pretty sure most of you don't either. So like any good trader or good carpenter, I like to have multiple tools in my toolbox. I have short names and I have long names that I'm going to watch for tomorrow. If the market is red and the sky starts falling, I'm going to look to my short trades for possible trades, because we know trading counter trend can be foolish, it can be difficult, it can be unnecessarily painful. You know, if the market wants to sell off, why do I want to try and find the one or two stocks you know, that are moving up? Maybe I'll just jump on something that has a good weak setup or something that indicates that maybe it's ready to reverse in this type of market condition. One such name is Dish. Dish has been moving up here the past couple weeks. They had earnings back at the end of April, and you can see that they just breached their 200-day exponential moving average, this yellow line, in a very bullish fashion, right? We've put in about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 11, 12 green days in a row as this thing keeps ripping up higher in pretty big volume. Obviously, there's some catalysts in play here, but like all good things must come to an end. You know, what goes up must come down type of thing. We're just looking here for an opportunity to capture something that is so maybe extended to one direction that it's only only going to take a small catalyst to reverse it and get some kind of mean reversion, move back to reality, so to speak. So this is what I like. It hit my reversal scan. It's coming up here on a pretty big technical area for it, $56. Let me zoom out here. You can see the 56 area, or this 55.50 area rather, has been a pretty big area of technical support. When Dish was trading in the last couple of years above this spot, it bounced off it a couple times, only to eventually fail, come down and make new lows. So it stands to reason that this area of previous support will now act as a future area of resistance. Just like I teach all my students in the courses, previous support becomes future resistance, and previous resistance will become future support. This is there's no exception to this. So we should see a potential slowing at this 55.50 area, just because we know that this area was once support. It held price action up. We can expect it to be resistance and hold price action down once we test it. Combine that with an overbought RSI, meaning the stock is extended to the upside. It's in overbought conditions, and it's running out of potentially running out of steam. So what happens is when stocks start reaching these overbought conditions, they get these parabolic moves, is it starts attracting a lot of short traders, people who come in and see this as an opportunity for the stock to show some weakness after showing so much strength. It's healthy, it's normal. Like I said, nothing goes straight up or nothing goes straight down in the market, and this has been a pretty straight up move. So we're getting close to that point. Whether or not we get a big reversal or just a small consolidation period along the 200 and move higher, don't know. But we're going to watch it to see what happens if there's a weak market. Maybe we get in this for a short here under 54, and we write it down to this 51.20 area where we have some support. Because it was previous resistance, we know it'll act as future support. So that'll be our first target here. If we can get short on this under $54 or off of this 55.50 area, I bet you more than likely this thing probably taps 55.50 and then comes in. We're at 54.80 right now. So we'll see what happens. This is just one to watch. Like I said, if the market is weak, give us an opportunity for a quick reversal. What else was I going to say about this? I had something else to say about this, but I don't remember. Damn it. Okay, well, that's Dish. Be on watch tomorrow for reversal for short if the market gives us the opportunity. We have another short name that's on watch for reversal. It's another big mover, CGNX. It's put in a pretty big move from the $40 area to the $45 area over the past few weeks. Also in overbought conditions here, you can see that this thing just keeps marching higher. It has filled its gap. We had this gap all the way from the earnings event back in August of 2015. Nice little gap here. It took a while, but we finally completed the fill of it. And now it's in overbought conditions and looks like it may be ready to pull back. We have a somewhat of a doji-ish candle here where there's indecision between the buyers and the sellers, not quite sure if they want to buy it and take it higher, not quite sure that they want to take profits and bail on this trade and look for something else. So it's an indecision candle. What's interesting is that it has a pretty solid support area here at intraday support area here right at 44 even. Okay, so this would be one I'd be watching under 44 even. What do you notice about this chart? Well, one, it's parabolic. Two, there's a lot of green days in a row. The buyers have been in control this whole time. Three, there's not many new lows being made for the most part here, right? We're getting candle over candle, not candle under candle. Candle over candle is confirmation of trend continuation. It tells us that the buyers are making new highs, not that the sellers are making new lows. So what I'd be looking for is really the first candle after this big run up to make a new low. This is how I would day trade a reversal. The same exact criteria. I'd just be looking at a 5-minute chart, maybe looking at a 1 or 2 minute chart, depending on the stock and the size of the move. But we're looking for candle under candle. We're looking for that confirmation that the sellers are now in control, that there's that pivot or change in power, and the bulls will start panicking, taking their profits, saying we've had a good run. The bulls will come in and say now's our chance, and we'll see if they can't push us down lower. So we'll be watching this. It's at 44.53 now. We'll be watching this under $44 to see what happens. And I like this here for a move. What did I say? For move back to 41.50 would be the big target, the long-term target, but more realistically, I suspect we're going to move to 42.50 here. So be good for a couple points from where it's at now. It may very well move higher here. Test this $45 area again, which I'll be watching. Just like Dish, there's a big area, big pivot just above where it's at now. It's at 44.50 right now. If this hits this $45 area, you can see right here this big area of support will probably act as a pretty big resistance spot, especially when you combine the overbought conditions, the extension, the parabolic move, all these conditions that are just saying the rubber band has been stretched too much, guys, and it's going to break or it's got to come back to the middle. So this is what we're seeing right here. Off this $45 area may be our entry, or under the $44 area when we start making new lows. Either way, I do like this for reversal, especially if the market is weak. Okay, one of the long names for tomorrow. This was brought to my attention by a student of mine, or one of our members. I obviously can only watch so many charts at any given time, can't possibly see them all, and so this is one I'm happy I was somebody had showed me here. You can see we have Macy's earnings. Oops, shoot. Oops, shoot. Whoa. Everybody calm down. Calm down. All right. Macy's been in a pretty big downtrend for quite some time. You can see going back to 2015, it's been selling off, and tried to put in a recovery here, crossed over its EMAs, couldn't hold, and then ultimately failed. Well, now, after the last earnings event, it gapped down, put in a pretty sharp rejection of this $30 area here. It said, nope, we're not going lower, moving higher. Trucked right back on up, and now it's tapping this 34.65 area, which happens to be very close to this previous candle, which is the high of the day, gap down after earnings, which also happens to match this previous support area, right? The numbers aren't exact, folks. It's an art, not a science, okay? But the point is this area where the price action bounced off of, we call this previous support, and now we're seeing this area's previous resistance because we're unable to break through this level, right? We tested it once here. Market was, Macy's was weak because of the earnings, sold off, held $30, came back up, and now we've tested it 3 days in a row, but this area back here is just kind of holding things back. One of two things is going to happen. One, it's going to break out and we're going to see a squeeze as it fills this little gap here. Or two, it'll sell off and move back down here to 32 bucks or whatever and take a couple days and ramp up and try again. One of those two things is going to happen. What I like about this for a bullish move here now is that you see this big move up here. We haven't broken this moving average. This is the 20 moving average. 20 EMA. We haven't broken it, and we've been using it as support, really. You see these little tiny candles after these big ones, right? We gain all this ground with these big candles, and then we have these little ones, these tap, tap, tap. Each time we tap this level here, big area of support back here, this pivot, every time we tap that area, the sellers aren't rushing in to short the stock. and the buyers aren't bailing on the stock, causing any kind of weakness. Everybody's just kind of sitting here watching while it consolidates under this level. So this is what I would consider to be more of a bullish sign than a bearish sign, because there's no selling pressure at this time. Of course, we have a weak market tomorrow. Stock trading at resistance could easily sell off, right? So this is just one to watch over the 34.65, 34.70 area for a move back to 37. Okay, why 37? Because that's the close of the gap. We'll probably see a little stop here somewhere along the 50. Moving average is at 36.40 right now, but we'll definitely see a move into the gap here. Pretty sharp one, I suspect, once we're able to break over this 34.70 number. So that's Macy's. That'll be on watch for long tomorrow. Probably answered before, but what do the horizontal colored lines indicate? It's a good question. The horizontal colored lines that you see here on this chart are Taz indicators, right? I use the Taz indicators. This is the Taz Market Map. And I also use the Taz boxes, these red and green and blue horizontal lines. Taz Market Map, the indigo, violet, purple, red, right here is a 100-day market map. Shows the last 100 days of volume traded at each price level. So you can see where the most volume is traded at what price in the last 100 days. This yellow line, this is what I call the area of contention. This is where the most volume has traded in the past 100 days, and that would be at the 31.38 level. For whatever reason, that's where everybody's buying and selling. We see a lot of capitulation there, a lot of churn between buyers and sellers. And then as we move up higher, we see that there's less and less volume, which tells us that there's less competing volume, which as we get into these short little blue areas, we call these squeeze zones, right? You can see that these lines are super short. Well, this is a gap, right? Not a lot of stock or not a lot of shares have traded in this price range. So you're going to have a squeeze zone here where the shorts are going to look to cover, and potentially we'll see accelerated price action through these areas. You can see in the red, yellow areas, the candles are going to be much smaller because there's more buying and selling volume. As it moves away from those areas and the lines get shorter, the volume gets less, you see the candles start to become a little larger. This is what we call it's moving towards the squeeze zone is what we would say here, and we're seeing accelerated price action because of the lack of competing volume like you have down in here at these levels. These boxes just indicate the Taz. That's the Taz Market Map. The Taz boxes here, the red and the green, in some case the blue midpoint here. These represent support and resistance areas, also based off of a proprietary algorithm they use to calculate those numbers. You can see there's a little wick here and a little wick here and a little wick here and all these different little wicks over the top of this resistance box. But based on the volume and based on the price action for this time frame, we see that the box is telling us resistance is actually at 44. In this case right here, 44.66. So we know that we would be looking for the stock to take on a more bullish, bullish move over that area, and then under the green it'd be support, so it'd be a bearish move down below. And you can see that these boxes they do populate. This is ready for a new box here. These boxes do populate ahead of time, so you'll see a couple days going, and then all of a sudden this box will appear here, and you'll know that when it breaks down below this green area, get out of the way or short the stock, and sure enough it did. It has a high degree of accuracy. It's constantly being refined, but very happy with the Taz boxes and the Taz Market Map. Hope that answered your question. Just to be clear though, they are expensive indicators. I believe they're $275 a month or something. As a new trader, obviously encourage everybody to keep your overhead as low as possible. You have enough pressure to be profitable and not have to deal with a ton of extra overhead. And so once you grow your tools as a trader, you can start buying all the fancy stuff because it does cut down on some of the time and the research that you're going to have to do. But initially, it's definitely not something that you need to be mired in as a new trader. DVN, Devon Energy Group, not her corp, not normally a fan of oil and gas names, especially in this market, but I do like the setup here. Again, we have another flat top, we have the stock double topping here. It's either going to break out or it's going to fail this area. Okay, why am I leaning towards a breakout? One, oil is up, right? Oil is moving higher. Oil is absolutely killing it. Two, we're looking at the stock crossing over all its last moving average. We had a bullish cross back here, the 50 and the 20 moving averages. It's held those levels, and now it's testing the 200. Today we get a close above the 200 moving average. This thing is now officially what we would consider in a bullish pattern, right? We have this big move up from the bottom, about matches the time oil started turning it around. So this isn't an uptrend. We're now over the moving averages, but we're testing this big pivot spot at 37.56. It tapped that area today, which was also a big old candle wick right here back in April, which coincides with a pivot back here in August and then again in September. And I bet if I zoom out, maybe if we go back far enough in time, we'll see that, oh, shocker, look at that. We see another pivot here. Again, right, it's not to the penny, but you get the idea, right? This is obviously some sort of pivot area for this particular company, because all the way back in 2009, stock price bounced off of this area or just above it and traded above it for the next 6 years until just recently. So we know that it's an area of contention. We know that it's going to be a potential squeeze zone, and this is what we're watching for a long over the spot here. I'll look to take a long on this, probably over 37.70 as a starter, but more importantly, $38. I like the whole numbers, and we'll look for a move short term here to about $40. Why $40? Because it's going to be the next area of support, which is going to be resistance in the future, right? Previous support becomes future resistance. We see this pivot spot. It's an area of contention in through here, and again, if I zoom all the way out, we'll probably find that it has some other sort of significance down the road. Yeah, definitely a good indicator to have, CFOX. I love it. I've been using it for a couple of years now. They have a suite of 7 indicators. Most of them are for day trading, but I do use these for swing trading. You can use them however you want. They also work for swing trading, but I do use them for day trading. They have a great scanner. Very cool stuff. It's the reason why I use Taz tools, by the way, is because it's what institutional traders use. They're a lot of the Bloomberg traders and all the terminals have Taz indicators, and so they're one of the biggest providers of institutional indicators. Basically, the only advantage to that is I am now looking at essentially what an institutional trader is going to be looking at, and they are going to be the ones who move the market, right? They're the ones that come in with the big volume, and they're the ones who I want to be out of the way of if I'm going to go against them, and they're the ones that I want to ride the wave up in front of if they're going to be going in my direction. So I kind of get a little bit of an idea of what they're looking at and what they might be thinking. Again, something that a new trader has no business needing, but over time you can see how that might have added value if you're looking to gain an edge. And you'll see a lot of correlation. The more volume a stock has, the more accurate these levels are, by the way. So anyways, that's DVN. Long is going to be over 37.70 for a starter, and I'll add to that position over $38. Initially, be looking for a move to 40, and we will see if oil can hold up. You can see USO here has put in a pretty nice recovery off the lows from 767. We have this nice slow, steady move higher. I cannot pull up a chart of crude. I don't have my TC open, but you can see that obviously oil has been recovering, and so most of the energy stocks should be following suit. Another stock I wanted to point out here, this is just one I've been watching for a couple weeks now, Tesla. I like this for an options play. I also trade a lot of options. I'm big on volatility plays. The implied volatility on Tesla right now is fairly low. And the stock is trading at all its moving averages, the 20, the 50, and the 200. This is what I like to call a shit or get off the pot area. We will get a move away from this level at some point very soon. You can see that stocks don't trade along their moving averages for a long time. They very rarely stay flat. They'll pick a direction. You can see here we traded against all these moving averages here for a while before breaking down. This isn't really the best of examples here, but the stocks tend to move away from the moving averages only to return to them later. Well, right now we have this nice little pinch here of all of them. Implied volatility is really low. I happen to think that if the market goes higher, Tesla is kind of one of those big names that everybody likes to come in and buy, and this will go higher in the short term too. Because implied volatility is low, I'd be a debit spread trader on this. Remember, when implied volatility is high, we want to sell credit spreads. But in this case, it's low, so we want to use a debit trade. We want to buy the volatility, and we'll count on an increase in price action that maybe follows the broader markets, and with that, we'll get a sharp increase in volatility, which is nearing 52-week lows. So we should see, like I said, a shitter get off the pot move here shortly. So I'll look to do a July expiration on this, maybe at 220, 225 July bull call spread. And we'll risk a couple bucks per spread on that, but we stand a good chance to make a couple bucks, so we'll see what happens there. Like I said, I think that this moves higher short term. It can get to 225, no problem. It can do that intraday, so this one could be a pretty quick profiter for us here, but 240 would be the next level after that. I like to do my spreads as quick as possible, in and out. There's just too much risk associated with holding for too long in the market, so I always have my students or traders will ask me, hey, when are you getting out of this? How long do you plan to hold this for? I never base a trade on time and how long I'm going to hold it for, because that has no bearing on profitability of the trade. I'm looking for the same thing on option spreads every single time I trade them. I'm looking for 30 to 50% return. It means if I spend $1, I'm going to look for $1.30 before I start selling to $1.50, somewhere in that range, and then I'm going to start taking profits. Not holding for 300% winners, which you can get on options. I'm not holding for 100% winners. Statistically speaking, you will find, well, I have found, because I keep my statistics, I have found that I can hit 30% return on my initial investment in an options trade with near 70% probability of success. So 70% of the time I can get 30%. If I held for 100% every time, I might only get that 5% and then have a bunch of losers, right? So we have to understand our own numbers, how we trade, and be able to track that so that we can maximize our profitability as traders. And so I know that I can buy this for $1, sell it for $1.30, and I can take a ton of contracts, and I can make 30 cents in a day or two, 70% of the time. And I will never trade. I will never trade that for those 100 or 200% winners that you get, a couple times a year, because news comes out on something and you weren't really expecting it. Those are lotto tickets. Base hits win ball games. Home runs are fun. They'll happen from time to time if you take enough swings. But base hits win ball games. So Tesla's on watch, and the last name that I have for tomorrow is going to be Boot Barn. Okay, Boot Barn, this is a low volume play here, only about 250,000 shares, maybe a little more trade on this every day. He's put in a nice move here up off the lows following the earnings. Disappointment. Not a big event either way. You can see this thing, this is where it's trading at now. And you can see that there's not a lot in the way here between where it's at now and this $10 mark. Okay, we have, zoom out a little bit. Trying to make this wider. There we go. Okay, so we have this little window in here where this thing is put in this big move up here, kind of tested that area, sold off, put in this big double bottom here over the past few months, and then now it's testing this little entry to the window again. I suspect we get a little move into the window, and we're going to test this 870 area. 870 area is where I'd look to take a long. What's different about this time from the last time it tested this area? Well, last time it tested this area, it followed this big move down, it had a nice recovery, and it tested the 20, but it never got over the 50, right? We never had this price action cross over the major moving averages. We got over the 20, that's a short-term moving average, but longer term 50 here never even got tested. So what's different about this time is we've not only crossed over the 20 and held up, but we've tapped the 50, and today we closed above it. So now we're in a little bit more bullish territory here. We're a little bit more, bulls are in a little bit more control. We've passed through this yellow line area. Remember the market map? I told you this is the area of contention, and this is where you will see most selling and buying and selling competing volume at. 777 is the price that this yellow line is. Well, now that we're firmly above it, we're going to get into where the lines start getting shorter. We call those the squeeze zones. We know that there's less competing volume. We should see an acceleration of price action. So we have all these bullish conditions, right? It's the totality of the circumstances. We have a nice bullish pattern here. We have this rejection of the lows, cross over the moving averages. We're holding that area. We're above this area of contention. We know that there's a nice window above us with not a lot of competing volume is going to be in the way. So all these little things are in our favor here. We like this for a long. Again, it's a low volume stock, so if volume starts to come into it, it can move quickly. Look at the size of the price action moves when volume pours into this thing. You get these nice big, 1.5, 2 point days, mostly around earnings, but this thing can move when volume comes in. So this is worth taking a look here over the next couple days, and this will be on watch. Over 870, possible add over the $9 area, and then I want to ride this up to 10 bucks. Now that we're over this 50 moving average, I think that we're going to see another test of the higher levels here. Okay, so that's boot, and that is on watch for tomorrow. Also as a long, let's see here, 4TMZ asks, I still need to see some review over how to put in the order for an iron condor. Well, it depends on what broker you use, because they're all going to be different. I personally use like Options House for most of my iron condor trades. Okay, so let me see here. I can see if I can pull up an order. And also, if you haven't already, yeah, definitely big short float on that one. If you haven't already, check out the options link there. I just, whoops, no, what the heck is that all about? I gotta log. It says I have to log in. Guess I'm not logged in. There we go. There we go. All right. Make sure you check out that page there if you haven't already. It has a sample order up of an iron condor. You basically, iron condor is two credit spreads, right? You have your debit spreads, which are low implied volatility trades looking to capitalize on an increase in volatility. An iron condor is a pair of credit spreads. A credit spread is a high implied volatility trade looking to capitalize on a decrease. Because think of implied volatility as price action. If it goes too low or too high, it's always going to want to revert to the mean. It's the same thing as price action. Nothing goes straight up or straight down. It always wants to go back to the middle and maintain equilibrium at some point. So an iron condor is two credit spreads, and you're looking for price action to remain in the middle of your two short strikes. And so the way I put them in Options House is I'm able to set up a four-legged order at one time. Some brokers like Speed Trader, Sure Trader, they won't let you set up a four-legged order at one time. You have to buy the long legs, and then you can you can sell the short legs, and it's just not a clean way to set up the order. It's not a clean way to manage the trade. It's very hard to track profitability. So I like doing it when you can set it up as a four-legged order. You can do that in E-Trade, I believe. I'm pretty sure. I know you can do it in Interactive Brokers, Options House. Options House has an amazing demo account with real-time data for options traders. If you haven't, just go set one up over there. It's free. It's real-time data, and you can play with all their options analytics tools, and you can really start to see the power of properly analyzing these particular setups. So I like using iron condors around earnings events, because what happens at earnings? Well, we know that earnings are volatile events. Market makers know this. Stocks know this. All traders know this. And that's why price action in options premiums tends to increase before the event. So we sell two credit spreads, a put credit spread and a call credit spread, and we look for the price action to stay in between those two different spreads while the earnings event is going on. And then after the event comes out, if the price action is uneventful and doesn't have some huge news that blows it out past the credit spreads. It stays in the middle somewhere between our two short strikes. And the applied volatility is going to be gone. It's sucked out. They call that volatility crush. You can Google volatility crush. There's a bunch of people who write about it. It is a very speculative way to trade because it has a high probability of failure if you don't know what you're looking for. So in the upcoming swing trade course, we're going to do new live classes on June 27th. I'm going to go over how I determine what's a good setup. For me personally, just kind of a quick rundown, I look for iron condors on trades that have names that have weekly options only, that I can get a credit of at least 50 cents. And I always look for the market maker move. You can look for your market maker move. TD Ameritrade will tell you what a market maker move is, and so will Doe.com. If you use their platform at all, it's part of TD's network, so they can tell you what a market maker move is. Options Hacker, another one. Anyways, basically just to find out what the markets are expecting a stock to do, you can take the nearest term expiration, probably the weekly that you're looking to trade, add the at-the-money call premium and the at-the-money put premium, and that'll give you the total cost of the market maker move, or that's the anticipated price of the market maker move. So if you have a $4 put and a $3 call, you have a $7 anticipated move by the end of the expiration of that option. So if it's a weekly, the market maker is saying we think it's going to move within $7. So if you know that the market maker thinks it's going to move $7 for earnings, maybe you want to be a little bit more cautious and you want to set your iron condor up with a 10-point spread between your short strike and your short strike for your put and your call and the actual underlying price. So you give it 10 points room, maybe not 7. If you can get a credit for 50 cents by adjusting the size, the width of your wings, that's pretty ideal. And then, like I said, I always look for that 30 to 50% move. So if I get a 50-cent credit, I'll look to cover the trade around 20 cents. And you know, it's a high probability of success. Most of the time, I can end up, if you look in the analytics area and you do your analysis, you can get a 80 to 95, in some cases, percent probability of success. It's not ever going to be a big winner. Your gains are capped. You will never get more on a credit trade than the money that you got a credit for. It's not like a debit trade, right? You never get more than the credit you paid, but it's a game of base hits. It's a high probability setup. So unfortunately, there's a lot of risk with them if you don't choose the right ones, or you choose names like Amazon or Google that can move 300 points in an event or something ridiculous, you know, then it's pretty easy to hit a max loss. So like I said, it's definitely tricky, but I do like those trades. And you're going to set one up tomorrow. Yeah, I'm going to look through the earnings calendar now, and I'm going to add those to the watch list as well. Excuse me, guys. I'm losing my voice. I need to get some water. I need some salmon for dinner. I'm starving. If you guys have any questions, go ahead and shoot me an email, jeff@warriortrading.com. Thanks for hanging out with me tonight. And hopefully I'll be back here soon with another installment of our watch list events here. Have a good night, everybody.